Hello, good morning everyone. I hope you're all well and that you've had a good weekend. And thank you very much for attending today's webinar on business planning and monitoring. Before we do start the webinar, I just have a few bits of housekeeping that I'd like to run through. You are in listen only mode today, but if you do have any questions, then you should see a Q&A option that comes up at the bottom of your screen. So please do feel free to pop any questions into there as we're going along, and I will address them either as we're going along or I can pick those up at the end, whichever works best. But I do encourage you to ask questions throughout, because of course the main thing I do want to ensure is that you do have something to take away from the webinar, and of course it's difficult from this end, to see how everyone is, well, it's difficult when I can't see you all ultimately. So if you do can ask more questions, then that would be fantastic. I do like a little bit of interaction because it's like I'm talking to myself at this end. So please do ask the questions. There is also a chat option at the bottom as well. So if you did have any information or any thoughts that you wanted to share with the group, then please also do feel free to use the chat option at the bottom too. Okay, finally, I just need to let you know that today's session is being recorded, so that will be available on our YouTube channel, and so we can circulate that to people who were unable to attend. So just need to make you aware of that. Hopefully you can hear me okay. If there are any issues, first of all, in terms of the sound, and also in terms of the screen maybe not moving as it should, then please do let me know, either by using the Q&A option or the chat option as well. Okay, so the main purpose of today's session is to address, first of all, why we need a business plan, then looking at the main components of a business plan and how that is presented, and then just picking up on monitoring performance, why we need to do that, and also the key things to look out for there. I will also just cover off a few things to consider in relation to the current situation, in relation to the COVID situation, and then we'll finish off with some FAQs, and also, like I've said, if you do have any questions as well, then pop them into the Q&A and I will pick those up as we are going along. Okay, so to give you a little bit more about myself, or to introduce myself, my name's Sarah. I have been with the firm for 22 years, during which I have done my training and qualified as an accountant with the FCCA. The majority of my time at Jackson Stephen has been spent as a general practice manager. So I had a portfolio of clients, a range of business types, and also specialised in professional practices as well. And I predominantly help those with meet their year-end compliance needs, so in terms of their accounts, personal tax and corporation tax, and of course if there were any clients that we did do their bookkeeping and VAT for, then of course we help them with that, and also helping them with the management accounts, and also discussions about any strategic decisions that they needed to make in their business and general business advice. More recently, I have moved over into the digital services aspect of the business. This is really since the emergence of technology. It's having a big impact on us and how our clients operate. So now my main role is overseeing the team that implement technology for clients. So helping them with helping them generate internal efficiencies, maybe doing things a little bit differently, and like I say, using technology for that. I also then naturally am quite heavily involved on internal aspects as well, so how we as a firm can use technology to deliver services to our clients, and actually involved within that there's a lot of training and change management involved. I decided to take that step because I'm generally interested in helping businesses, and by helping them with technology, it really, what I do see is that if they can streamline certain areas of their business, then they have more time to either spend with their families or to focus on their business and growing their business, and I genuinely have an interest, I have a genuine interest in that. Okay, so like I said, the first thing that we are going to consider is why we need a business plan. Now, it is actually statistically proven that businesses with a business plan are more likely to succeed than those that don't. And the reason being is that they have some clear objectives, clear goals, and can ultimately get more people involved within delivering those goals as well. The success of a business doesn't necessarily fall down on one person. It's about having the right team involved and everybody's part of that team, that business, actually being involved in that journey and having key roles and responsibilities to ensure the success. So it's not just for one person. If we have a plan, we can share that with everyone and motivate and target everyone as well. Now, business plans are usually prepared by businesses who are either owners, I should say, who are looking to start up in business. And also existing businesses that are looking maybe to grow or diversify into a new area, so to implement new products, or even maybe to move to other premises, other locations. Or they may be used for people who are looking to, or businesses I should say, sorry, who are looking to seek investment, apply for loans or finance, and sometimes for any forms of tax planning, especially where financial transactions are involved, you will sometimes see HMRC asking for to see a copy of the business plan, or like I said, the banks or the investors wanting to see a copy of the business plan, because ultimately they want to make sure that any investment that they're giving to that business is sound. Okay, so a business plan then is really considering, I suppose, 6 key areas. I'm going to go into the next slide in a bit more detail about how we present a business plan. But first of all, picking up on the key components, a business plan is there to set out what the business is doing. So it's time to really assess what is it that we are doing. Is it that we want to, like I said before, look at a specific product, a specific service? I'm going to explain that in a bit more detail in terms of the plan. Who our key customers are going to be. So by knowing who our key customers are, we can then actually start to build a strategy to make sure that, definitely in terms of our marketing strategy, we're actually focusing that to the right people. How much money you will make, which can also actually, sort of be teamed with how much money do you need to make. It might be that you have a very clear idea on what sales revenue you can generate from the outset, so what your sales projection is going to be, or it might be that you know very much how what your cost base is going to be in terms of rent, wages, fixed running costs. It might be that we need to know what our cost base is to know how much money we need to make from that. And then, of course, we can then actually start to consider whether that's viable or not. So once we know what our products and services are that we're delivering, who our target audience are, and how much money we will or need to make, the business plan will then start to look at how will that happen, and of course, when will that happen. And that's ultimately the main components of where the strategy comes into it. So are we going to have a certain team of people that are responsible for delivering this new service? Will it be everyone in the firm or in the business that's responsible for delivering the service? And ultimately, what are our timeframes? Do we need to, what are we going to be doing on day one? Where do we want to be within 1 month? Is this something that we need to happen within, the first 6 months? Or will it take longer than that? And then finally, where will the funding come from? So is it that we want to actually seek investors, or do we want to actually raise some form of finance instead? So like I said, those are the key components. When it actually comes to delivering that into a business plan, then that generally will actually follow a fixed structure. And I've noted here, I suppose, what the key areas of a business plan, what a business plan will look like. Okay, so in terms of the business plan then, first of all, they will start off with an executive summary. And an executive summary is really going to pull in the key components from each of the following each of the sections below. So it's quite a short and punchy statement, really just to set the scene of what the overall business plan is trying to address. Oh, apologies. Okay, and then that leads into the business overview. So this business overview is going to be very detailed, and it's going to talk about what industry that you're in. And if you have any niche areas within your business already, or within the business that you are setting up, then you will talk in a little bit more detail, about that here. It's important to note that when you are talking about your business and of course your products, the person who's reading your business plan may not necessarily be au fait with your business, or certainly with your industry. So when we are actually writing these components, certainly the business overview and the products and services, it is important, like I say, to actually provide as much detail as you can, so that end user can actually really start to understand, first of all, your business, and then secondly your products and services, and to try and keep it jargon free as well. Anyway, I've digressed a little bit there. So just coming back onto the business overview, in here, as well as explaining about your business, what your business does, the industry that you belong to, what you will be doing in here is also noting down or explaining what your business model is. So are you a product-based business? Are you a services business? And ultimately, what are you offering to your clients? So you may be a subscription-based business, you may be leasing goods, you might be selling items over the counter, such as retail, or you could be providing services for an hourly fee or a fixed fee. So it's quite important to really consider exactly what your standard model is as well. Okay, and then we move into the products and services section. And within the products and services section, like I've mentioned, this is actually where we're going to set down specifically what it is that we're delivering to our clients, so what the purpose of our plan is. So it might be that we're selling, like I say, a product, but what we'll do is we'll give a description about that product, but like I say, jargon free, and then start to provide some context around what the customer's needs are. So we're delivering this product to these customers, and this is why we believe that this will be needed by them. What we will also consider in this area is also pricing, service, and whether the customers are going to have any choices within that. So will the customers, is this one product that we're providing to customers, or is it going to be, they might have a more tiered approach. So, our customer may buy this as our core product, but we can also then maybe provide a maintenance contract that sits in with that. So any related services that might come within your product or existing service will be actually addressed in here. Okay, so once I've actually set out the products and services, we then need to actually include some market analysis that's really going to describe or to explain why we believe our product or service will be successful. Now, first of all, in here, what we are going to consider is who our ideal customer is. So is that people or consumers? Is that businesses? And who ultimately will need our product the most? Now, it might be that there are some customers that will need the least convincing to spend money with us, and it might be then, if we can identify those customers, we can actually then start to adapt our marketing sales plan a little bit further accordingly. So if we are aiming at people, key things to consider then is, where do they live, what age are they, what do they do for a living, and what do they care about? And like I said, the reason that we're considering these is so we can tailor our strategy, including our marketing plan, to be reaching the people that we want it to reach. So again, if we're a business, what industry are our key customers in? How big are they? Where are they? And how much money would they typically spend on our type of product and service? And again, that's going to also tie into the financial aspect as well. Now, in this section, What we are also going to do is consider who our competitors are. Now, what we do also tend to recommend is listing down what the advantages of the competitors are, because of course, if they're already in business and they're doing well within their business, then what we need to know is what they're ultimately good at, because we need to provide our potential customers with a reason to move to us. So in order to do that, in order to actually plan our strategy accordingly, then we need to know, do an assessment of our competitors and know what they're good at, how they operate, so we can, when we are speaking to potential customers as well, can say why we're different and give that reason why they should come to us. Okay, so the next area that we then do look at is a risk assessment, which is fundamentally all the things. It sounds a bit doom and gloom, it's not meant to, but what we do need to know when we are pulling a plan together are all the things that could potentially go against us. Because by knowing what could go against us, we can then actually incorporate that into our overall strategy, and hopefully, reduce the impacts. Certainly start to reduce the impact that these risks may have on our business. So this may be things like, will we have to rely on heavily on a specific employee? So what may happen if that employee was to leave? Do we need to have a reliance on a big customer? A small amount of big customers, and if so, again, what could happen if those big customers leave? Because what we need to know is what we then need to plan is how to stop that from happening. What are we going to do to actually stop that big customer from leaving, or stop that specific employee from leaving? Will we want our customers to behave in a specific way? So for example, it might be that we're providing a maintenance contract, and we need our customers to all sign up to the same level of maintenance contract for us to be able to deliver that in a consistent manner across the firm and be more effective. So what happens if we have some customers that don't fit the bill, that don't behave and do what they want to? How are we prepared to actually say to those, I'm sorry, we can't deal with you? Or do we take those, but then how then do we deal with them? Do we have an alternative way or alternative product that we might use for type of customer or different different tiers of customer? And it might not necessarily be problems, it could also be challenges as well. So what would happen if a competitor was to lower their prices? But the key thing here is to, once we know what the risks are, is to rank those risks low, medium, high, and certainly have, if that risk is substantial, say how we'll deal with that, or have an outline of how we plan to deal with that in the future. Okay, and then what we start to move on to is the strategy. So how are we going to deliver this? We know what our products is, or service that we're wanting to sell. We've assessed our customer base. We know where we're targeting our energies. We've done our risk assessment, so we've preempted any challenges that are going to come up. But now, how are we going to generate these sales? How are we going to market our business? How are we going to position our business so we're attracting the right customers that we want to attract? Now in here, again, this is actually where knowing who your target audience will come into, because this will help you make sure that you're targeting and focusing your energies in the right place. And when I say that, for example, if your target audience is millennials, millennials are typically want to do everything on their phone. They quite like push notifications. So it might be that they're heavily involved in social media, TikTok, Instagram. So it might be that you need to cover off social media as your main marketing platform, then followed up with other marketing methods. Or it might be that your target audience are older, And it might be that they prefer to receive emails, so you need to incorporate within that a list of email marketing as well. It might be that your audience is quite varied, so you might need a mix of social media, you might need a mix of targeted emails. It might be that your core customers attend industry events, so you might need to incorporate that into your marketing plan as well. So ultimately, what we are considering here is how you're going to interact with your customers. How many steps will there be in each sale, which of course then ties into what the cost of this, what the cost of marketing will be, and who ultimately is responsible for generating that income. It might be that you have a specific marketing department or a specific person within the business. A lot of the times the business owner who is responsible for dealing with that. Or it might be that you need to then support that with a PR agency or a digital marketing agency, because of course marketing does take a lot of time, and any business owner really needs to be making sure their time is invested in running the business. Okay, so then what we're going to look at are milestones. So the milestones are really the roadmap of what needs to happen and when it needs to happen. So starting on day one of the business, what needs to happen on day one, what needs to happen in month one, what needs to happen in 6 months' time, what needs to happen in 2 years' time. Now, this might be broken down into easy steps or quick wins, or it may actually then be broken down into bigger steps, which then themselves may have their own series of milestones within them. The key point is to note down all of the things that need to happen and then to put them into an order where we can actually then start to build what our roadmap for the business is going to look like. And that ties nicely into progress reporting. The reason we need these milestones is so that we can actually then monitor how we are performing against our initial plan. It's one thing having a plan, which is great, but we need everybody involved within the business to be meeting those deadlines, because without having those milestones, we don't know how we're actually achieving, if we are actually achieving our goals, and of course if we're on target to succeed in certain areas. So this isn't necessarily about punishing anyone if deadlines aren't met. This is about having the opportunity to pause at regular intervals to check that everything is working as it should do, and if there's anything that needs to be done differently, then what do we need to do? And what we do suggest here, this might be, first of all, what this section is going to cover is how you actually plan to monitor that progress. So this might be from an operational level, having regular update meetings with the heads of department that are involved in the plan. Or it might be by everyone feeding information into a certain place, and one person can actually then be controlling and collating the information and reporting that back to the key stakeholders. And it might be by way of using some form of project management app as well, which has each of the milestones set out, and as each milestone is then ticked as complete, what you can then do is actually see your performance, or see how you're actually performing against those milestones. So there's various different ways that you can do that. It's key to actually note down how you are going to do that, and then obviously making sure that we do continue to do that. I've mentioned a couple of times about team and having different people involved, and indeed if you do have those different people involved, then it's definitely important within the business plan to note down who those key people are, who are going to be tasked with helping deliver the business plan, and also providing an overview of their responsibilities and experience and history as well. And the reason that's important is if any form of investor or banker is actually reading that business plan, they need to have the confidence that the team or person that is actually here to deliver the plan actually have the skills and the experience to be able to deliver the plan. So like I say, what we do is we include a profile for each person and highlight the relevant skills that they include. And this might be contractors, it might be consultants, it may be business mentors, and it may also be, like I mentioned, staff as well that you're using within the business. You may also include accountants in there as well, because that might show that you do actually have a series of professional advisors working with you too. And then moving on to the final two sections, so budgets. Once we've actually then established all of our key components, our products, our service, our customers, who's involved, our milestones, what we need to happen, when it needs to happen, what we also then need to pull together is our financial projections. Now, typically in a business plan, financial projections may span a 2 to 5 year period. And these financial projections will include projected profit and loss account, a projected balance sheet, and also a cash flow statement too. Those are what typically investors or bankers will ask for. Now, within the profit and loss account, this will itemise your costs and also predict your income. And also what we can include here is scenario analysis. So tying into that risk assessment, we could include a scenario, if our sales were to fall for any specific reason, then this is the impact it would have on my financial situation, and this is what we would then do about it. So in terms of profit and loss account, income, expenses, which will be fixed expenses and variable expenses, and also incorporating scenario analysis to actually show the financial impact that our plan is going to have on that business. The financial projections will then include a balance sheet. And a balance sheet is, in summary, shows what the business owns against what the business owes. So it shows our net assets or shareholder, the equivalent of shareholders' funds. So if we are actually then seeking, investment from investors, then they will like to see that those shareholders' funds are increasing, month on month throughout that projection, because it will give them the confidence that they need that they're going to get a return on their investment. So what we also do include in here are any capital investments that we're going to make in terms of machinery, fixed assets, computer equipment, any premises. Of course, our trade debtors, it very much depending on what our business model is. If we have an invoicing model, then we'll include our trade debtors in there. If we receive any loans from other people, we already have some, for example, we'll include those loans in there. And any other liabilities that we may actually then run as part of our business will be included within that balance sheet. And then also the cash flow, again, very good idea, because it will show what money is going to flow in and out of the business. So we can then actually then say, first of all, if you are seeking finance from the bank, then we can prove that we can actually support that finance, we can service that loan. And also what it will do is it will tell us, if our invoicing model is 60 days, for example, it might be that has a negative impact on our cash. So we know that we might need our invoicing terms to actually be shorter than that 30 days. So it can also dive into a couple of business decisions as well. And finally, the finance option is pretty much, if we're actually then going to seek finance or investment, this is how much investment I need or how much finance I need, and this is the reason why, supported by the budget. And it will ultimately then it it will ultimately be in their hands then to decide if they want to invest or not. Okay, so hopefully that makes sense, it's quite clear. Preparing a business plan, it can be quite a detailed exercise. My aim here is really to cover off the key components that you do need to think about. So if you are looking to prepare a business plan, then these are hopefully will give you the key areas and the food for thought that will actually start you off on that journey. Okay, so any questions at all? Like I said, do feel free to use the Q&A option at the bottom if you do have any questions. I will move on in the meantime. So we've mentioned about monitoring performance. So we've prepared our business plan. We now have the investment that we needed, but like I've said, we do need to make sure that we are meeting our milestones and also our financial goals as well. Now, doing this will help us identify any blockages. So it might be that the specific employee that we're relying on may not be performing as they should. It might be that the customer that we wanted to come on board hasn't come on board, or certainly isn't coming on board as soon as we needed them to. There could be various different reasons why we don't meet our targets, or we may well have exceeded our targets. Doesn't always have to be the negative. It may well be that we've exceeded our targets. In either case, by monitoring our performance, what we are then able to do is to adapt our strategy accordingly. If we can't monitor, we can't then adapt our strategy, and we might not know that any problems exist before it's too late. So if our business is growing quicker than what we anticipated, bigger customers have come on board sooner, then it may be that we may reach a point where we need to engage more staff. So we need to have a look at what that might look like from a financial perspective. And again, if that customer hasn't come on board, we need to know, again, from a financial perspective, what that looks like. And it might be that we need to change our strategy to then focus on more, focus on getting a bigger number of smaller customers maybe. The main point is, without having that information and that review, we don't necessarily know what it is that we need to do. Now, as part of monitoring performance, what we do recommend are first of all, establishing what the key performance indicators for the business are. May not necessarily always be financial. It might be a specific number of customers. It might be a specific number of contracts that you need to generate. But in any case, setting key performance indicators and also establishing targets will help us ultimately with that review. And like I say, if we can actually review that information, we can then adapt our behaviour accordingly, which gives us more chance of succeeding. Okay, now I have just noted here just a snippet of information that just looks at how you can, I suppose, monitor from a financial perspective your ongoing performance. So like I say, very brief example of a profit and loss account, which is showing, first of all, information from a 5-year forecast that was prepared as part of the business plan. You can see that in the columns that are highlighted in orange. And then you can also see the actual data, so the actual income figures that are actually flowing in from the accounting software. So in this case, you can actually see that we've exceeded our income and of course our net profit by quite a bit actually. So in a much better position than what we forecasted to be. So like I say, it might be that we revise our forecast to actually generate more, or it might be that we're happy with that. And what you can do, rather than having information in a specific table format that might be quite sort of busy, what you can do is you can actually just focus in on maybe the specific. When I mentioned about specific KPIs, it might be easy just to focus on specific information, or specific items, gross profit, net profit, and like I said, number of customers, number of contracts instead. So that's what that might look like. So different example from different set of example data. So they're probably not quite doing as well as they should be. And same principle for the balance sheet. So again, we have that 5-year forecast. So we can see from a cash perspective, we were actually forecasting to have 79,000. Again, this is based on example data, whereas the actual bank is actually showing 5,000. So that then will lead me to think, right, I need to do something about my cash. I need to revise my forecast because my starting point is ultimately different. So I need to revisit that to see what that would ultimately look like and what that means now for my future position. And again, what you can do, rather than having it in a table form, is actually just highlight the specific items that you do want to look into. Okay. So what we've looked at so far is in terms of preparing a business plan. Why we need to prepare a business plan, what's included in that business plan, what does that business plan look like, and of course business plans and how what do we need to do in terms of monitoring. Now of course a business plan, like I said at the beginning, is usually for a new business looking to set up a new business, or an existing business that's looking to set up new products, new services, or looking to obtain finance either from banks or investors. What we also now do have at the moment is a need for planning because of the current situation, the current climate that we're in. We've had a lot of uncertainty over the last 12 months, and sadly I think that's expected to continue for a little while longer. Now, so what I thought was useful was really just to summarise, I think, what businesses probably need to look at in terms of the here and now, as well, if we've got any that aren't necessarily ready to prepare a full-blown business plan, but want to kind of certainly look at the here and now. I've really just noted some key pointers of what to actually look out for. And first and foremost, I do recommend that every business at this moment in time just takes a little bit of time to prepare some financial projections, certainly for the short term, looking at the next 6 to 12 months. And these financial projections, I would suggest include, first of all, sales. What impact is COVID having on your sales? So are your sales down? Are they expected to be reduced, certainly for the first part of this year? Certainly for January, February, March, maybe. When do we anticipate these sales are actually going to start increasing again? And then looking at our cost base. So any business will have a number of fixed costs that they need to incur on an ongoing basis, and that might be, as I said before, rent. It might be vehicle leasing, and of course wages, which at the moment we have the furlough scheme, which is obviously very helpful. But what's going to happen when the furlough scheme comes to an end? What's going to happen in June when we need to start making loan repayments for our business support loans? And all of this will allow us to then actually see ultimately what impact this is going to have on our cash in the short term. And that will actually then drive a few decisions on what we need to do. Now, what we need to do is going to be very specific for each business. Each business has got a different journey that they're going through. Each business operates in a different way. But if we can prepare financial projections that looks at the impact that COVID is going to have, then we can actually then start to actually focus on specific areas to ultimately try and protect the business. So in terms of what we might then need to focus on, it might be that we need to establish some specific sales targets for a period of time. It might be that we might need to focus on some specific businesses that may be less affected by COVID, or in industries that have been less affected. There are some businesses that are doing quite well. Or it might be that we then actually need to start implementing more stricter targets in terms of costs. We may actually need to assess our overheads in their entirety You know, we may actually need to make some difficult decisions along the way. Do we need ultimately all of the staff? It's a horrible thing to say, but you know, do we need all of the staff that are part of our business? Are we going to need those moving forward? Do we need to actually just look at that and consider what we do need moving forward? Because maybe we've established that our business, certainly for the next 12 months, may not be back, you know, to where it used to be. In terms of rent, do we need to actually apply for more rent holidays? Do we need a holiday for a longer period? In terms of any car leases that we've got, do we need to be asking for some, you know, increased, some more payment holidays for those? In terms of our debtors, are they paying us quick enough? Debtors will have an impact on your cash. Do we need to be speaking to our current debtors to try and encourage those to pay a little bit quicker, so you can protect your business, and you can be there for your customers in the long term? And then finally, if you did get some funding, some business support funding, you know, when the repayments of those are due to start in June, are you able to service those? Or do you need an extension on the terms, or is it that you might need a different, you know, you might need to convert that to a different type of funding that has some form of longer payment terms? So like I say, every business will be different. Every business has different challenges, but fundamentally, if we can actually prepare a projection to see what is going to happen, then we can certainly then dive into certain areas that we may actually then need to focus on. And of course, to reiterate from my previous slide, again, what we need to do is actually keep a close eye on this, definitely throughout this COVID period. Excuse me. Throughout this COVID period, I would recommend, certainly in terms of cash, monitoring actual results on a weekly basis, and keeping a close eye on that cash, definitely. I think the difficulty with this current situation, and the reason why I suggest doing that more frequently, is because of the level of uncertainty involved. Okay, it would be remiss of me, first of all, not to mention that we are able to help you with this. It possibly sounds like there is a lot to think about. So what we can do, we don't necessarily want our clients to be going alone and struggling with this. Of course, what we can do is help you with this. So we have sort of 3 examples here of just how we can help our clients. First of all, for anyone who is concerned about the COVID impact, then what we are able to do is help you provide a short-term cash flow forecast, which we can then actually review weekly or monthly to suit you, and provide updates to that, so at least you're getting that information to help you through. Anyone who is actually looking at the longer term, we can then help with the preparation of a long-term forecast, including them scenario analysis that I mentioned earlier. And we can then also meet on a regular basis, usually monthly, to compare those actual results to the forecast, and then provide any advice and support that you may need on changing that strategy and adapting that strategy. And then also for anyone who is, you know, quite new or looking to sort of completely replan, we can also help with the preparation of a business plan, financial projections, targets, and also provide that monthly support in terms of discussing performance and updating them financial projections and plan, depending on whether we've actually met those goals or milestones. We can provide a whole range of help and support, but those are just 3 sort of examples really that really tie into the preparation of planning and monitoring. Okay, so I have just noted on screens then just a couple of frequently asked questions that I will just go through. If anyone does have any questions, like I say, please do feel free to pop those into the Q&A section, and I will just proceed with the FAQs in the meantime. So, like I said, these are questions that we do come across quite often, so I just thought they were quite useful to address. So first of all, again, I'd like to closely monitor my financial performance against plans and targets, but my accounting data isn't up to date, so the comparisons would become time consuming. The last thing that we want to do is for those comparisons to be time consuming. As I mentioned at the start, I am all about making sure that everyone's accounting is done as efficiently and quickly as it can be. So the last thing that I want to do is to be promoting something that is quite time consuming. And ultimately it doesn't have to be, definitely not in this day and age, and with technology. The ideal situation is to have your accounting data flowing into your accounting software in real time, and that then enables us to actually do those comparisons again in real time. So the key to me is having the right tools in place so they can then actually use that information correctly. Okay, the second question then, again, so quite commonly asked, I know in my head where I'm up to, but I don't see the advantage of preparing a business plan, strategic plan or COVID-19 strategy. Why would this benefit me? And again, that's absolutely fine. A lot of business owners might know are very focused, on their business and know what's going on at any point in time, and that's absolutely fine. To me, it's probably a dangerous way of running a business because there will inevitably be something that is forgotten along the way, and say that's an expense, for example. Sometimes that one expense could make all the difference, and you would rather know that that's going to happen before it happens ultimately. Plus, if you do have a plan, like I said earlier on, you can actually then share that and have more people involved, and therefore the success the success of the plan, it becomes easier to achieve because there's more people involved in that. Okay, so final couple of FAQs. So I often hear of businesses preparing a strategic plan. Is this the same as a business plan? And this is actually a very good question, because the two are quite often confused as being the same thing, but there are subtle differences. So first of all, a strategic plan is generally prepared by an existing business to focus on specific areas of a business, and typically longer term plans that evolve over a period of time. Now they're generally an internal document as well, so they're prepared internally. Everyone, the key placeholders are all part of the development of that strategic plan, and therefore the delivery of that strategic plan. And a business plan is usually prepared by a new or young business, or, like I said, a business that's looking to move into a completely new product, service and area, and ultimately somebody who needs some form of investment. Now, that said, the key components of a strategic plan and a business plan are broadly the same. The main difference is going to be how the terminology and how that, and the language that you use within preparing that document. Like I say, a business plan is usually used by somebody who doesn't understand your business, doesn't understand your industry, so therefore it needs to be pitched slightly differently than what it might need to do when it's a strategic plan, or being used for internal purposes, because everybody knows the business, everybody knows the jargon that might be used within that business. Okay, and finally, have we got any advice on where to start preparing a business plan? Yes, we have. So I always say it's a good idea to actually start by doing a SWOT analysis of your existing business, or of the here and now, or of the business, of the here and now. Let's think about what we're trying to achieve, and then let's do a SWOT analysis, like I said, the here and now. Because by looking at strengths, weaknesses, opportunities and threats, what we can actually then begin to identify is what we need to focus on, or what specific areas we need to focus on as part of our plan. And of course, some of these components within the SWOT analysis, such as threats, would tie into your business plan. So your threats will tie into your competition, your assessment of competition. Opportunities will ultimately tie into your product. Weaknesses, could actually form part of your risk assessment. And then your strengths, again, forms part of your market review and why people are ultimately going to come to you. Now, for anyone who does want to see or would benefit from seeing a template, I do have a template that I'm quite happy to share with anyone who would like to take a look over them as well. Okay, so if you do feel that you would benefit from some more information, then what I've been through today is summarised in our business planning and mentoring guide, which is available on our website. It has also been circulated by our news as well. But if you do want to have a look at that and any of our any of our other guides, then you can do so in our guide section on the website. A recording of this session will be available on YouTube should you want to have a look over that again. And also do follow us on LinkedIn and Twitter. We do circulate information, tips, tricks, not just necessarily in terms of business planning, but also tax, also accounting, software focuses as well. So do take a look at those. Do make sure that you follow us, and also you can contact your relationship manager as well if you do want some more information. I'm also more than happy to have a conversation with anyone, so please do feel free to contact me as well, and I've noted my contact details there. And then finally, we do have some future webinars coming up, one more so focusing on cash management, which is on the 16th of February, so if you would like to join that, then you are more than welcome to. And also we have another webinar on cloud accounting as well, coming up on the 16th of March, so if that is of interest, then please do feel free to register for that one too. Okie doke. So I can see that there are no further questions that have come through, in which case I am going to leave you to get on with your days. I hope you found that webinar useful or interesting. There is a feedback form that will pop up at the end of the webinar, so if you could complete that, that would be incredibly helpful. And of course, if you do have any queries or you want to chat through anything that I have been through today, then again, I'm more than happy to. So thank you everyone for listening, and I will hope to speak to you all soon, and enjoy the rest of your day. Thank you.